Final company on our list, which is Henry Schein. So this one is a healthcare provider, dental, and a little bit of animal health. So dental in the sense of dental implants, crowns, all of that stuff, as well as all of the medical equipment and the surgical equipment and the x-ray equipment and the vacuum drills and goodness knows what else you have. I think we all know what we're talking about. The machinery that the dentist wheels out.
Everything that makes a lot of noise when you're in that chair.
Not even to exclude the chairs, which they make as well, you know, with the doctor pressing on the foot and you're going up and down and the spinal part is moving and so on and so forth. $14.4 billion. So not too enormous.
No.
Share price to earnings ratio 27.48. No dividends, it doesn't seem. Share price has been doing very well.
Yeah, no, they have.
What can we say?
They've been sort of one of the biggest dental producers in the US. They also have a long history, a family sort of history coming out of the company.
The Schein family.
And they're the biggest producer and distributor of animal medical devices. So very
similar.
I mean, and that's definitely an industry where we've seen sort of a lot of interest pick up worldwide. People now have medical aid for the animals and things like that, which
spending on that is through the roof. So the interesting thing was that the founder family, which is the Schein family, Henry Schein originally, was then succeeded by a successive, you know, son, grandson, and so on. But in 1989, Stan Bergman, who was a South African, relocated to Europe, to America, then was the CFO. And when Jay Schein died early of cancer, he was appointed the CEO. From 1989 to 2016, they bought 200 companies. So that's obviously what Stan Bergman's speciality is buying dental technology companies. Yes,
you know, I see they've been the leader in those two industries for quite some time.
Well, they got to be leader, they bought everyone else.
So that's why, you know, they're focusing on sort of rather instead of developing new technology or new products, they actually just go out and buy these smaller companies.
So for example, if somebody develops a new, you know, way of doing a cleaner or a chair or a vacuum or an x-ray machine or some new technology for fillings, you know, then that is something which the company then looks to acquire.
Yes.
And I know that here in this country, Henry Schein, for example, owns some of the dental distribution businesses, dental warehouse type businesses. So then they tie up all of the dentists directly in those relationships. They offer funding and financing
is
to
a
the
big
dentists
thing
as well.
Yes.
Right. Okay, good. Anything to be said about that? A little bit of earnings related volatility coming in every now and then. Companies, of course, have that kind of trend, but looks hot to me.
Yes, it is hot. I think it's hot. You know, just one more comment is that when you look at medical aid funding and what they actually pay for, they're more inclined earlier, like you said, to pay for a hip replacement or a knee replacement than to pay for big dental procedures.
Oh, really?
So that dental isn't sort of a big inclusive item on most medical aids, which could have an impact on this earnings.
But do you expect that to change over time? Do you think it's seen as the medical aids as a sort of semi-cosmetic issue?
I think it could be, but also, you know, I think as time evolves and people live longer, this probably will be something that will be more included.
Okay, good. Right, so we're hot on that one as well.